Today, folks, have you been ready? Have you been paying attention? These earnings are jaw-droppingly boring for the most part, with the exception of maybe Google. I mean, Tesla's now trading down about 4 to 5%, fluttering a lot. Google's been trying to hold on to its gains, and all I've got to say is, with all the excitement going into this, after all the stock pumping, there hasn't materially been much that we weren't expecting for the most part. Now, I want to point out that Tesla bulls are largely delusional, which is why I ended up selling the stock to some extent. We'll see how low it goes. It could still pump. Elon could pump the stock at any time. But when I was watching some of these like live reporters, man, did they go into this bullish, especially Farzad here. If you ever watch this guy's an ex-Tesla employee, man, the bullish sentiment around this going into it was insane. They had 77% Tesla will beat expectations and 23% said no. However, if you scrolled around on some other streams, I saw Amit here, and like I've been watching tons, and they were just running these polls, and I find Amit doesn't have nearly as much of the Tesla fan base as some of these obviously Tesla-oriented channels have. So it really kind of shows you the mixed vibe. Nobody ever knows. It's pure speculation. I wouldn't gamble on earnings ever. My rule of thumb is I don't buy stocks the week of earnings. I usually wait till at least after earnings to buy anything. So Tesla, we'll see if it holds up. I think fairly should drop to like 220, maybe around that price. I would start picking up some shares again. Who really knows? Because things right now just aren't going in the direction they really need them to be going in. And the bulls are constantly changing, their direction with the company. Oh, like auto's not a big deal right now. At least they're getting growth out of energy and generation storage, which is great. It's up 100%. It's saving their total revenues, along with obviously services and other revenue driving up 21%. This kept their total revenue in a 2% incline, which year over year is absolutely abysmal for a company trading at a 60 to 80 times multiple. Total gross profits here, at least increased by a measly 1%. And I laugh because at least and I know I'm sounding bearish, but I'm very bullish on the company long term. But I do laugh that they said they're working vigorously on its opportunity given by the outsized potential when it comes to self-driving, but it's based on technological development. We are managing our product portfolio with a long-term orientation and focusing on growing sales, maximizing our install base, and generating sufficient cash flow to invest in future growth. Though their free cash flow, missing expectations here at 1.34 billion, which is still pretty great, but for the price we're paying at that 800, well, where it was sitting at that 800 billion market cap, still seems a bit ludicrous to me personally. I still think the fair value for the company today, which it'll never reach, because there's always going to be some hype built into this company, and I recognize that. But with hype built in, fair value should still be closer to 500 billion or less at minimum for the current market environment we're sitting in, right? But otherwise, the company's in a fairly healthy position. They've got a great balance sheet. I've kind of gone through everything here. It's energy storage is kind of taking the story today. If you take a look down here, first and foremost, let's take a look at their assets. I don't want to take a look at any of their fancy photos or the fact the robot is kind of starting to do some things. It's still materially unimpacting. They pushed, the Robotaxi Day event. The only thing I like is that their balance sheet is still materially strong. They've got a ton of cash. Total assets at 112 billion, total liabilities here. I mean, we're only sitting at about 45 billion, 30 billion in cash. It's been increasing over time. The company's not going anywhere, right? I mean, they're in a good position. The hype is dead. There is no hype coming out of this at all. So we'll see if Elon can revitalize the stock going into earnings. Like I said, I'm a long-term bull. I think come 2025 to 2027, we'll start getting a turnaround in revenue. Interest rates will be down. The company will start seeing bigger growth rates on their energy storage if that continues to pick up at the pace it's going. We'll maybe get some actual robotaxi announcements, which are still kind of on the bleeding edge of what he's been saying every year for years, that it's almost there. And man, if that ever gets announced, I could see the stock pumping aggressively. So flipping kind of to the 180 here, let's talk about Alphabet, because Google, another stock that I sold that obviously I shouldn't have because it pumped up pretty dramatically after the fact, is doing exceptionally well. It is still growing very nicely and kind of putting behind it some of the AI concerns that I still currently have on the company. But still, they're growing pretty nicely on their balance sheet side of things. And you should take a look at quarter over quarter. I think it's more accurate. I hate that they don't show like a 4-line chart just showing some of the quarterly results versus the yearly, because yearly they're doing great. Their changes in revenue, 14% revenue growth, operating margins back up over 30%. Net income, very nice here. Earnings per share at $1.89, really justifying some of the costs. Everything I see here is just absolutely incredible. Google search is still growing. YouTube ads is still growing. Google network is actually declining a little bit, but for the vast majority of it, year over year, this is really great revenue growth. Google Cloud is growing, really taking up the hot seat here, kind of really taking the spotlight for sure. If we just kind of compare it though on a year over year basis to see what the quarterly looks like, I just want to take a look at total revenue because it was sitting at 80.539 billion last quarter. This quarter here, they're sitting at 80, almost 85, 84.7. They grew, you know, 4 point, around $4 billion just over last quarter. Like this company still proven to be an absolute growth beast, which they need to be. And what still concerns me is that Google, you know, their search is just growing so dominantly, and I'm still a little worried that as these AI products come into play, they might still be stealing some of the actual traffic, just because they're able to increase prices, compete with, you know, ad blocker, and they're doing all this stuff to increase margins. Overall, their search ownership has been slowly declining. So I wish they'd break the numbers down more extensively, but man, if you're a Google shareholder here, there's nothing to be ashamed of. I mean, these numbers were beautiful. Google's still a bit expensive. It's probably trading closer to fair value here. It's always great when it dips to like a 20 to 25 PE. Tesla's PE at this point doesn't really matter or mean anything. Honestly, this 60, whatever the PE is, even after earnings, doesn't matter. This is a hype stock. We'll see where it ends up. But for as long as we're kind of sitting in this upper range of this $800 billion market cap, I'm not very bullish on the company from a value perspective. Maybe if the stock drops enough, I'll probably potentially end up buying back into a bit of it, just for the Robotaxi event that might be coming in October. Because what I think we're going to get the hype slump. We're going to go back through this, you know, roller coaster of what Tesla truly is, a hype stock, and we're going to get into the depressing phase of, oh man, you know, the earnings weren't really that great. Wasn't that exciting, and then it'll drop a bit, and then we'll get back into the excitement of, wait, there's a future for this company and there's huge potential down the road. So we'll see what happens. We'll just play it by ear. Right now, Tesla at 239, Google holding up 3% right now, probably deserved, but I will or sorry, that's Amazon. Can't confuse the two. They're both actually trading similar in line though. Amazon's doing pretty well today. But I'll pass that question off to you. I'd love to know what you think about these earnings in that comment section below.